Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bearish scenario where we are looking for a 5-wave impulsive structure to the upside in a wave A or 1, looking for a bigger 3-wave corrective structure to the downside in a B or 2 before continuation to the upside in a wave C or a wave 3. Common target for a wave B is between the 382 and the 886 Fibonacci, 41.8k to 39.1k. Common target for wave 2 is between the 05 and the 786, between 41.1k and 39.6k. Fibs are taken from the low to the high of A01. Currently, this low over here did not touch the 0.382, which lowers the probabilities that this is the low of a wave B or 2, but also this low has been made before the 0.382 fib time, taken from the low to the high of A or 1 as well. By far, most commonly, corrective structures are finishing after the 0.382, so again, it lowers the probabilities that this is the low for much further continuation to the upside. If we then look at scenarios that could lead to lower prices still in a wave B or 2, the first scenario we have to look at is this flat over here. Here we are looking for a 3-wave structure in a wave A, B, and then an impulsive move to the downside in a wave C. Common target for your wave B is the 1.236 to the 1.38 Fibonacci, taken from the high to the low of A, giving you a target area between 44.3k and 44.6k, which is in nice confluence with this box over here between 43.9k and 44.7k. En route towards the upside, we do have to flip some resistance areas. The first one was the white box here, 42.8, 43k. We are now above. Second is this blue box, 43.1k, 43.2k, bit of resistance. Then we have the red line, which is the point of control of this bit of the chart here, only hit with a scam wick on my chart, but not actually with a candle at 43.5k. And then we kind of enter the target area for this wave B, after which we are then looking for an impulse to the downside in C, where we have a weekly for support, 41.5k, but also this blue box here at 39.9k to 40.1k. If we then zoom into this wave B over here, what we want to see is a 3-wave structure to the upside inside this wave B in a bigger flat. Most commonly, wave B is a zigzag to the upside in a 5-3-5-wave move. In this scenario, we were looking for price to move towards the downside, and we had 3 areas of support. We had the golden pocket taken from the low to the high. We had the gap over here, which price found as support at the moment, and the daily naked point of control over here as well. Now currently price is moving towards the upside, potentially the low of B is in, and we can look for a wave C. However, it is not yet too easy to count this low over here as the low of a wave B. So I will keep in mind the potential reversal to the downside to hit the daily naked point of control, but important is that then we need to see some weakness and proof of resistance. As long as price is moving towards the upside and volume is increasing, we're simply going to look for higher prices and potentially for that wave C over here inside the resistance area. If we go to the bearish scenario where we first take the lows before taking the high, then in this particular scenario we are looking for either a WXY or an ABC, a bigger 3-wave structure to the downside to move down directly. In this scenario, inside wave X or B, we are then looking for a 3-wave structure in a WXY. Wave W here is a little bit of an issue because in wave W we then have to look for a zigzag to the upside. However, wave C is very long compared to wave A, 3 times longer, which is rare. And also if we want to end a wave C here and an A, B, C inside wave W, then the end of wave C has to be an expanding diagonal. And an expanding diagonal here doesn't work nicely because wave 5 is longer than 3, but wave 1 is longer than 3 as well, making wave 3 the shortest wave in this ending diagonal structure, which is not allowed. So a zigzag here to the upside is actually quite difficult. But nonetheless, if we would say, hey, this is the end of wave X or B and we are looking for a move to the downside, zigzag in W, zigzag in X, triangle in wave Y over here, then what we have to look for is an impulse, a diagonal, or a double 1-2 for much lower prices on the chart. Now, if we look at this move towards the downside, it's very difficult to count this as an impulse, because in an impulse, we want to see a 1, 2, 3, 4, 5. There is lots of overlap here and also lots of three wavy structures, lowering the probabilities for an impulse to the downside. Second option is then a diagonal, where we are looking for a wave 1, 2, 3, 4, 5. Well, we now took this high over here as well, so that doesn't really work nicely. And if we were thinking about a diagonal, then wave 3 here is longer than wave 1. You can see here the 1-to-1 taken from the high to the low to the high over here, which lowers the probabilities for a diagonal. And if we are looking for a double 1-2, then we needed a wave 1, 2, 1, 2. Now invalidated as price over here, potential second 2 took the high, right? So an impulsive structure to the downside doesn't really work, lowering the probabilities for a wave Y or C to take the lows here first before taking the high. If we think outside the box and we look for scenarios that actually finish over here instead of over here, where then this structure is going to be a leading diagonal in a 1, 2, 3, 4, 5 corrective move and continuation to the downside in the bearish scenario, then first of all we have to look for a flat here, right, where we then have a first move to the downside in a wave A, look for a bigger flat, and now we're looking for a much bigger move to the downside. The problem with the flat over here, however, is that wave C is more than twice the length in time of A and B. This red vertical line here is a fib time taken from this low to the end of wave B, and then you compare A plus B with C. Preferably wave C is not longer than twice the length of A plus B. If so, it really lowers the probabilities that this is a flat structure. And on the second place over here, we have a WXY, where this is over here the low of your A and W, but then this is the high of your B or X. The problem here is with this scenario is that if this is a WXY for then a double zigzag, then your wave Y did not actually hit the 0.618. I know this wick did, but that's a scam wick, right? This candle over here did not hit the 0.618 taken from the low to the high of W to the low of X, which usually is a minimum target for a wave Y. So that lowers the probabilities of this scenario as well, increasing the probabilities of the scenarios shown earlier. If we go to the most bullish scenario, then we are looking at this scenario here where A or 1 is finished, 2 or B in this scenario is also finished, and we are looking for continuation to the upside in a wave 1, 2, and we're looking for a wave 3 for much higher prices, or we are looking for a wave A, B, and then a 5-wave impulsive structure in a wave C before downside. That all depends on the reaction we get as price moves up. The invalidation for this scenario is price moving below these lows over here at 41.8k, and as mentioned, the low over here did not hit the 0.382 and is also made before the 0.382 fib time. Does lower the probabilities a little bit, but nonetheless, what we have to keep in mind is that yes, we have resistance to the upside, but we also have this daily gap over here. And the way gaps work is, first of all, you need an impulsive candle to the downside, creating a gap, candle 1, candle 2, candle 3, creating a gap over here. Hit the gap once, rejection, twice, rejection, 3 times, rejection. You can imagine if we enter the gap once again, it increases the probabilities to fill the gap, which therefore means it would go past the potential resistance area we have here for a flat. So that is why it is so important that if price moves to the upside here, we have to be very aware of what price does here and look for proof of resistance, right? We want to see weakness, we want to see bearish CVD, RSI, stochastic, candlestick patterns, whatever it is you're looking for, because there is the potential for price to just continue towards the upside to fill the gap towards 45.5k. And we do have some additional resistance still above here, the blue box between 45.9k and 46.7k. On the lower time frames, we do have CVD divergences. We have the bullish CVD divergences here, higher low in price, lower low on the CVD. The target for this CVD divergence is price taking out the high here against the red line resistance at 43.5k. We also have some news today at 4 p.m. Central European time. We have this red flag. It says high impact. So there might be some volatility at 4 p.m. Central European time today. So make sure you trade safe around these hours. And if we then look at the probabilities of the different scenarios, then on the low time frame, which is the 4-hour chart, the probabilities at the moment are still higher for price to eventually find a bit more downside, as it is very uncommon for a low to be made above the 382 Fibonacci and also before the 382 Fib time. So therefore, we are looking for a B or 2, preferably lower. On the micro, which is here more locally, the probabilities at the moment are higher for a flat structure where we first take the highs before looking for the lows. And if we want price to move down in a B or 2, we have to look for a flat structure, right? I explained that if we are looking for a W over here, W, X, and then a wave Y, and internally here, we then have inside that wave X, a W, X, and a Y, right? That wave W, being a zigzag, doesn't have great probabilities. And if we are looking for a wave C or a Y to the downside here, then we need to look for impulsive structures, but currently it does not look like a high probability scenario. What is very important, however, is that we have to observe price moving into resistance, right? Because there is the potential for continuation. And if price does come down once more, right, rejects here at the target box, we are currently at resistance, as you can see. So if price does reject, we still have the daily naked point of control as attractive support for then a move towards the upside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.